Good morning, Bruce Phares here, Windermere Real Estate in Seattle. It's the 1st of June. It's Monday. Let's go ahead and take a look at the numbers if we can. There we go. Got my highlighter finally. There we go. Newly actives, pending inspections, pendings, and 6-day off markets. And then we look at the ratios, and that tells us what's going to go on. And I'm going to do a little bit of a quick look at last year in the same week and see how we compare to then. I'm going to basically focus on our 7 days, our weeklies here. We had a little bit of a high just above 200. Our crest, I'll call it, since post shelter in place. PCH stands for post-COVID high. 219 of them in a week, and there's our high for the year, 225 a few weeks ago. So at 151, we're back down by a quarter of what we were a week or so ago, week and a half ago. Highest number of total in the pool in the current actives, 655 for the year, right there. 7 days for the pending inspections, those properties going into transaction but still having a contingency. 60 was the highest number for the year, and now we're just barely under 50 for the week, and there was our highest number of total for the year as well at 88. The pendings, those properties that are in transaction heading to closing, 576, highest number in the total pool, 117 for a week. That was the highest number since shelter in place, and you can kind of see 95 heading up, heading up, heading up, heading up, and boom, we hit that, and then we start coming back down a little bit. So that was a bit of a surge right there. 6-day off market, the big kahunas, the ones that go off market within 6 days of hitting the market. We have two sets of post-COVID highs right here at 78 for the week and 298 in the total pool at any given point. You can see we were continuing to push up, 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 boom, and we hit that, and then we dropped back down again. Same thing here for 298. So in terms of the total pending inspections and the whole pool right now, we've got a high number in the pool at 661 for the year, and 168 was the highest number for a weekly set of that. Let's go take a look at the ratios. That's where the numbers really are. Pendings and pending inspections in relationship to newly actives on a weekly basis, we are just punching above 100% for that grouping that I've got set up. And that's 145th in the north end down to Othello on the south, and then east to west, water to water. 105%, and you can see here 104, 107, 102, 101, and 105 with this 98 here. So we're just barely above 100% in terms of pendings and pending inspections in relationship to total actives, that grouping right there. So where are the real numbers? It's in the big kahuna again, the 6-day off markets, and we're seeing here our relationship of 6-day off markets to pendings and pending inspections. We're seeing that at 50% and coming down to the 40s. And then just dropping just below the 40 percentile in terms of that. And then the same thing here. Let's look at the 6-day off markets in relationship to the newly actives on a weekly basis. And that's really the big number here. When as many as these were coming on, these are going off in 6 days or less. And we see that at 38%, just below 40% here, and fairly consistent in this set, right? So interestingly, for all the pending inspections and pendings, 38% of them, just below 40% of them are going off market in 6 days or less. And for all the newly actives coming on market in a weekly time frame, we are just below 40% on that. Let's go take a look at a year ago. Hang on, I'm going to pull this up. Okay, so here we go. Last year, let's go first year, this year. This year, looking at the weekly 7 days actives, 203, 208. And last year at this time, we had punched up from 130 into the 200 zone. So you can see already our numbers here are stronger and higher in terms of volume of listings coming on market in a 7-day time period as opposed to last year. The total in the pool, this really tells the story right here. The lack of inventory this year in relationship to where it was last year is very evident here. Here we're actually cresting 1,000 listings in the total pool available at one moment, whereas we're down in the 600s here. Pending inspections, a little bit higher last year on a 7-day time period. Not a heck of a lot of difference, but some. The pendings, and we are clearly much higher here in the 100 zone versus the 50 zone on a weekly basis. But interestingly, the total pool of pendings at any given moment, not too different. Interesting there. Our 6-day off markets, we are, look at those numbers there, and then look at these. We are double basically. Looks like we did get up into the 60s right here, but right about this moment. And this blue area right here, this is Memorial Day of last year, excuse me, and this is Memorial Day, of course, of this year. Totals, let's go for the ratios. That's going to be a big story here. Let's go for the 6-day off-market in relationship to pendings and pending inspections. And I believe that is this column right here. Let's double check that. Yep. We're in the 20s here after a surge that took place just prior to Memorial Day weekend last year. And here we are clearly in a higher zone. And same for our 6-day, forgive me for stuttering here. For the 6-day off markets in relationship to newly actives, we are clearly, again, stronger this year than we were last year. And there are numbers right there. But there was obviously a big surge that took place right around that point, right before the Memorial Day. Let's see if we have the same thing here. If we have a surge, 147. So our bigger numbers came in right after Memorial Day this year. So let's take a look at when we look at the prices basically and see what they were last year compared to this year. Green is the North Ballard to View Ridge. This is the area that's sort of I call the hot zone across the swath there from east or west to east. And then purple is anything of north of the Montlake Cut all the way up to 145th. And then the black is Seattle overall, again, 145th in the north end and Othello in the south end. And then the orange down the bottom, that is I-90 down to Othello. So let's take a look at where we were last year in May or April. April at last year was 740 for Seattle overall and 780 for the Ballard. And now we are at 780 for overall and 823 for Ballard. Let's take a look here, 692 on that. Let's take a look at the numbers. April of 2019 for the south end was 668 and it is 692. So it's up somewhat after a bit of a rocky run right there. But you can see the overall market. Let me get this out of the way here. Let's see if I can bring this down and make this a little bit less. Can I do it this way? No, I'm still going to be stuck having that thing on there. My apologies. Okay, well, I'll just get out of the way with my mouse. There you go. And you can see here, January of 2018, we had our big run up here. 2017 hits the crest. We have a market correction takes place. I'm always pointing this out to people. They get bored with it, but that's what it was. And then we had another run that then basically neutralized itself. And then here we are from the beginning of the year. And lack of inventory plus demand is continuing to push prices back up again. So that is it for the week and for the day for last week, that is. I'm stumbling all over myself. It's a rocky Monday coming in here. And sure hope that we can find some peace out there after this rather sad last week and a half. All right, that's it. Be well, be safe.